I just got back home from work. You already know. Look at this trade. What we were doing is risking 7,500 to make 1,300. This is a trend following system that goes away from the average price and goes in that direction. You can see that the performance has been really, really, really bad. This is not even the full graph, but dude, it's due. I'm telling you right now, it is due for a win. It's due for a win. Now we're up 11 grand. I mean, the account's, listen, the account is at 109. We started at 100,000. It's looking really good and very efficient. And now it's going down. How much did I have on risk? 7,500. Not in this single trade, though. The risk was about 3,500. I didn't allocate the risk. The system does. This is just a system that goes in the direction of trend. And that's what it is. So it went down. It triggered a short. And we trail our stop very slowly. This red line, very slowly trail our stop. And that's what we're doing. So you can see that the risk was about from here to here, about 38 points originally. And that's 2 contracts. So so it's actually $3,800 risk. Now we're risk free because the red line, you can see the red line is underneath the average price, and now it will never go above because price is below. This is just going to drag average price down the longer it stays below here. This is looking really, really good. We're just getting started in this trend. This short right now could be just getting started, my friend. It could go $30,000. I'm not even kidding. You know, it's possible. That's why we allow these trends to go. And that's why we don't always take trend following trades, dude. You don't always take them. Look at the back test on this thing. I can't. I'm in a trade. I don't want to mess with it. But I'll take another graph and disconnect them, and I will show you how much. I'll show you what happened here. All right. Let's go how many days back? Let's say 200 days back. I don't care how many days back. You can see the performance of this algo. This is the performance. Is it really that bad? Oh, no. Is it that bad? Oh, my gosh. Is it really that bad? That's 200 days? Oh, my goodness. Are you sure? There we go. Okay, wow. So you added a lot more days, and it looks like... See, the thing is, when you see... I just want to paint this picture. One second. Okay. When you have a high risk reward system, such as you're going for, let's say, 30R, and you're risking 1, right? You're very unlikely to win that. So what happens in most cases is that you get a lot of losses. You get a string of losses because it's very unlikely to win a trade ever. So you get a string of losses. Okay? And that's what happens when we have a high risk reward system like that, a low win rate system. So what this is a trend following system where I would qualify it as low win rate because the real wins are the biggest ones. So you can see from 20 to 30 here, that is 10 trades, 20 to 30. We went from 74 grand to 56. What's 74 to minus 56? I don't know. 18. So you lost 18 grand in 10 trades. Look at this one trade. Literally one trade, you make 25,000. Right? You lost 20 grand in 10 trades. You make 25 grand, which is more, in one single trade. Okay? This is a high risk reward system, very low win rate. What is the win rate on this? 31%. I think it's even lower than that, because a lot of the wins are like, oh, okay, $100. That's not really a win. That's not really a win. The real wins, the whole thing that makes this system have potential is this uncapped reward, because we do only trailer stop. So when I see this equity curve just drop like this, dude, this needs some life in it. You know what I'm saying? And you can't do it with the market, because the market can keep on going down. This is the algo. All right? It goes long and short. If you look at this, it goes long, stop out, short, stopped out, long, stopped out, short, stopped out. And the ES is one of the most fair symbols on the planet, because it's the most highly traded futures contract. It's huge money is in it, and I don't think that it's that easy to revert back to the mean. If you do the opposite of the system in the past however many months, I don't need Excel. In the past however many months, like, you can see the periodic returns. Let's go to the monthly. I mean, in February, you lost 17 grand. That's pretty bad. The month before that, you lost 2 grand. The month before that, you lost 5 grand. Like, it should not continue at this rate. Okay? And it's just losing so much, and I don't think that's going to happen anymore. I think we're going to get a win. We're going to get a trend, and that's what's going on right now. You can see it is going down. We are trailing our stop. We may or may not get out. We may or may not make much money on this. Technically, it could gap up. Let's say that whatever fundamental happens, I don't know anything about fundamentals, but what if something happens in the weekend that everybody likes and it gaps up and we stop out? We stop out at around like break even. That's fine. But we have right now $11,000 of free risk that we're allowing this thing to run lower as long as it wants to go. You know, as far as you want to go. There is no cap. And if you just think of the opposite of this system, where you better hope it goes up, because you're strapped in, you're down 11 grand, you have no stop loss, your target's at break even. Bro, that is the worst case scenario, and I can't tell you how many times I've been in that situation. Just personally, just looking at the market doing that to me, it, for some reason, it's like wrestling with the market, and it just pins you, and then you're on your back and just like trying to move, and it's just you're a deer in the headlights. You can't even. I erase my stop because I can't take the loss. This is the opposite, and this is the feeling that we should have. This right here, when it goes in our favor, we trail our stop. You say, you can go as long as you want. And we push, we don't get out right now. We don't get greedy. Not even greedy. We don't get fearful that it's going to come back against us. We're not being too loose. It's more so, it's like being more aggressive, actually. Like, yeah, you can go as far as you want. I'm like, in this case scenario, if I really wanted to optimize this system, I would put add-ons. Like in this situation, I would add a contract. Don't get out one. Don't flake out one. You add more, you know? It's a big difference, bro. It's a very big difference. So anyways, that's the trade right now. Very happy with the performance right now. I just want to go over just 1 week of trading the way I'm trading now. Now we're up 11 grand open. So let's see what happens there. But right now we lost one trade, which is trend following 102. We allowed this system to run, risked only $2,500, lost right away. And then I opened up a new trade and said, all right, I'll risk 7,000. And we're going to really give this thing a chance. And that's what we're at right now. It is hitting a trend. The hold overnight, the middle third 1.2 on NASDAQ, we are trading that as well. I'll show you that one. It is trade number 2. Trade number 2, we have it going down, and you're like, well, why are you going long here? I don't know my real thesis behind it. I do leave myself up for discretion, and this system seems to really work. If you look at the equity curve all the way down, many years, this thing goes up. It's actually one of the best graphs I've seen when I have not put filters on it. It's one of the best raw graphs I've ever seen when I coded it. So, and it's a very slow system, so I know that there is no glitch of some sort of where you place trades too quickly and you get out, and I put commissions and slippage in there, and it does look good. So this graph is on the comeback of a huge uptrend. I probably should put that graph in there, to be honest, so that I can know. But all right. Next trade. So this trade's ongoing. We're risking $5,000 to make $7,500. We're up $1,100 on that. That's fine. That's ongoing. This trade, you know what I'm saying? We're not in a trade right now on NASDAQ, but the system is running, and that's what I mean, that we're not actually trading. We're doing the robot to trade. We're trading the robot, and it's so cool to be indirect, honestly. Now, the main one that I wanted to show you, I can't believe I didn't take a snippet of this. Darn it. I'll show you. It is anti-breakout 4.4. This was one of the greatest trades I've ever seen. 3. I was risking $4,000. This is the equity curve. This is a intraday system. So both of those that I was showing you is hold overnight. This one's intraday. I'm risking $4,000. You can see on the graph. This is the back test. This is 2. So 4 is off the charts a little bit, and $6,000 is right up the high. So this is what I'm risking. I'm risking 4 to make 6. That's what I'm doing. It ended up in one day going $12,000 up in positive. So we won $12,000 on this system, the only day trading system that I released. And I will say it was phenomenal. And I really actually do want to go into the specifics of this system, because I think this is one of the greats at the moment. It's so cool, because basically what this system does, I'm not going to be able to get a graph because it's fine. I will. It just takes a while. It's unfortunate, but it takes a while because it's using second data. It just takes a long time to load, but we'll see. I'll tell you about it. It is NQ. We're going to go 35 days back. That's fine. We're going to go the system here, and we're going to go anti-breakout 4.4. We're going to turn that guy on. We're going to do second data. We're going to do allow 8 contracts. What else? I don't know if the inputs, risk per trade is 1,500, I believe. Which one? Yep, 1,500. All right. So this is what I want to show. And for the sake of simplicity, I just want to show you the system. It's going to be awesome. It's going to be worth it because it's really cool. It is very cool. It's an intraday, so that means I'm using intraday margins. That means I can control a bag for little. So now it's loading right now, and I want to show you basically what it is. This right here is a graph, and basically this is the chart, and sometimes, once in a while, it happens to go up, okay, or down directionally. I mean, in this case, it went up. Now, what I see is oftentimes when I was day trading, this when it's going up like this in a straight line, it seems to top and it forms like a big wick and then it goes downwards. And I'm like, oh, it's the top. So I get in short and I put my stop on the high. Okay. This system, what it does is every time it gets a short signal in an uptrend, it goes and presses buy. It goes, I'm long. Let's go. I'm long. No, there's no color for me, unfortunately. I'm long. I'm long. I'm long. I'm long. And it keeps on adding up to 8 contracts. And once you're full size, guess what I do? Oh my gosh. This is the secret sauce right here. That's the secret sauce, all right? Secret sauce. I'm giving it away. Secret sauce. So when I'm adding, my stop is very close. It's a moving average. It's very close. Very close. If we do happen to become full size, if we sneak by and become full size without stopping out, I will tell you, we no longer use this as the stop. We use a very slow one, which is almost like right here. It opens up the field. Now, once we get a full-size position, it no longer is a tiny stop. It says, screw this, I'm in for the big haul. I'm in for as much as you want to go. And it becomes a very, very big trade. And that's why you can get these tremendous days. That's why you can get 12 grand in a day. And these are the days before it. See how many trades there were? And there's losses here and there. There's 2 grand, 3 grand, 1 grand, 2 grand, 1 grand, $500, break evens. They're so small. Okay, they're so small. But then once in a while, when you do become full sized, because we allow the risk to be bigger, because we have a better position, we finally see massive wins, massive victories. And that's what this system did. And this theory, the theory of this buying spree like that, is this done loading? It is not done loading. Nice. So the theory behind all this buying spree is when I was losing, this is exactly the opposite of what I did. Not kidding. What I did was I saw a top and I got short and I said, screw it. I'm not doing a stop loss anymore. I said, screw it. Who needs a stop loss anyways? It's going to come back. And then I get stopped out. So it goes up, goes up, goes up, goes up. I get short. It goes up. I remove my stop loss. My stop loss was here. I say, screw it. I'm removing my stop. And then I get in short more. And I add to a big losing position. And before you know it, I am dying on the inside when this thing only goes up. It's just ridiculous. Why don't you go back down? Why? Oh, like why? And then it just keeps on going in one direction, and I end up losing my butt on it. Okay, so that's the agenda. We say, all right, if it keeps on going in this one direction, we're just going to keep on adding. And once we get full size, we're going to say, hands the heck off. Hands off the steering wheel. Hands off everything, guys. Just let it go. And we trail our stop until it dies. And that's it. That's what the system is. Lovely, lovely system, I must say. It's a fantastic idea. And these are all low win rate systems at the moment. But that's why you pick them up when the time is right and ripe. So you pick it up when it's in a drawdown. Like this one was in a drawdown. Bam, it hits. This one is in a drawdown. This one is in a severe drawdown, and that one has been working really good. That's the one up 11 grand. Okay? So I mean, we're almost at 13K. So this is in a severe drawdown. And that's what we do with high risk reward, low win rate systems. Is this actually going to work for us? We're already at 20 minutes. We're already at 20 minutes. I don't think it's going to... I don't know if it'll find it for us because it is using tick data or second data. I don't know what day this was where we got some massive wins. Bam, there it is. That's it. If you... Oh my gosh, dude. Please stop. Please stop. No. There it is. Fuck. I missed it. Sorry. There's some bull crap going on right now. I'm fighting TradeStation right now. Big war zone right now happening. All right. So if you look at this right now, it goes up. We add in every down signal it happens, and we do intra-bar. That's why I need second data, because the bars might not close bearish, and we use intra-bar. So the bars do need to act bearish, and then we get in, and we get in again, and we get in again, and our stop's very close. I don't have the moving averages on here, but our stop's close by, and it gets in again. Now we're whatever, another one. This is now full sized. Bam, we're full sized. You know, this red bar here probably would have gotten us out, or this red bar would have gotten us out, but we trail slower now. This thing rallies upwards. We're maximum size. Just imagine if this thing kept going. We win the game. This was 12 grand right here. Just this little movement was 12 grand. Just imagine at the high. We gave back 12 grand, bro. This thing was up 24. We gave up half our profit because we allow it to trail. It's okay. It wasn't ours I wouldn't say it's ours. It's not realized till it's realized. We always know that. So just don't treat it as realized. So anyways, that is an intraday system there, and that hit. So now we're up very well on the account and all that. So it's looking really good. I'm really excited. I'm really excited about how this trades, how we can trade this discretionarily. And no, I don't know how would be able to ever pitch that to investors. Like, why do you choose this? I mean, it's due. Like, it's freaking due. I don't know how to say it. I mean, we can systematize this somehow. I don't know how we'd automate all that, but I think it's just easier to just do it active management like that. I think discretion is possible. This is systematic discretion. I don't know what you'd call this, but that's what I would call it. So anyways, it's looking very good. We're 4 trades in. Nice. 4 trades in, bud. Talk to me in 400. Thanks. All right. Peace.